the budget is a few days away by the time you watch this video, and I've been covering a lot of the budget over the last month or so, 2 months, and there is a lot to be considered and a lot to discuss. So, what we're going to do in this video is speak to Kathleen Brooks, who is at XTB, and I'm just going to ask her a few questions around her point of view of the budget, working in an investment firm, the things that I think are worthwhile us paying attention to. So, Kathleen, thank you so much for joining me for another chat again this year.
Yeah, lovely to speak to you, Peter. Thanks for having me on.
Fantastic. So, just getting into it, there's been a lot of rumours going on about the budget in a few days' time. What signals does the government need to send to rebuild confidence in the economy, do you think?
Well, I think that the drip feeding of tax raising ideas since the summer essentially has not helped with confidence. In fact, confidence is absolutely on the floor, both business confidence, but also consumer confidence, because the first budget was very much about targeting business for extra revenues. Whereas this budget, the expectation was it would target all of us, so all consumers. So what we've seen is consumer confidence is very low, is in negative territory. It has been in negative territory for a long time. So that's nothing new, but it's just that it certainly doesn't promote growth. And that's what we've seen, a real sharp slowdown in growth in the second half of the year. So if the government want to promote growth, I think what they need to learn to do is to, remember the days, Peter, when budgets were they were almost like non-events for financial markets. They just happened. People weren't talking about them for months beforehand. So what they need to do, firstly, the budget it's an event and it's now what we have to look at. But if they want to help growth, they would be much better off saying a lot less. Because the damage that the budget speculation has done in the second half of this year essentially means that the budget, yes, there'll be some changes here and there. I imagine they'll finally decide on what they're going to do. But it's the speculation that has really caused the damage. And I thought it was very noticeable that the weekend before the budget, there was not one leak. Everything was very, very quiet after a very tumultuous week before that. A lot of reversals. And I just hope that they learn from that because, if they are in power till the end of their term, and that's a big if, but they're going to have another few of these budgets. So please don't ruin growth for 6 months before a budget by drip feeding out, what may never happen anyway, and doing these strange reversals and these strange press conferences. So, actually that's the best signal that they've got a control. The Chancellor and the Treasury have a control of their own messaging so that they're not either talking down the economy or frightening everybody with tax rises.
Yeah, I'd agree with that. There's been a lot of flip-flopping, reversals. I think the press conference to try and tee up the budget was, to some extent, I think, according to an analyst, supposed to tee up income tax rises. But now that's well, we're not going to be doing that now. I'd agree with you there that, yeah, they need to be a little bit more in control of the messaging and the leaks, because we've got to a point, even on the comments on the channel now, where people are saying, well, all of these leaks are out there. We're expecting the worst. So when they do something and it's not as bad, maybe it won't be as bad as perhaps it would have been received before. But yeah, it's how do you know for sure?
Well, exactly. And I don't know if it works like that, Peter, because I think that, that this has happened time and time again, that it just makes it look very chaotic, like they're not in control, like they don't have a clear strategy. And so then it just makes people more fearful. So maybe that big purchase they were going to do, but I don't know, be it a car, doing up their kitchen, something like that. Maybe people won't do it, or they'll spend less on the car, or they'll spend less on doing up the kitchen. That all has a massive knock-on effect. So confidence is a fragile thing, and this government really needs to tee it up. And they could do one thing that I think would really boost growth, would just be having one fiscal event a year. Don't worry about the spring statement. That is a lot of people calling for this, and I think it's a very good idea, including the IMF, actually. And I think the government really should pay heed to that. And of course, they need to balance out whatever tax take they're going to bring in with pro-growth measures. So far, they've just been talking about pro-growth measures. It's hard to see when you are a business and they're pushing up taxes, how, cutting red tape, how they've cut red tape. It seems like they're just adding it all the time. So, maybe focus less on tax increases, concentrate on the spending. I think that would probably be the most pro-growth thing they could do in this budget, but it's probably too late for that.
Yeah, and that was actually going to lead me on to the next question, which is, where do you think the Chancellor is likely to prioritise? Will it be growth? Will it be stability or short-term relief?
So I think if you were to ask me a couple of weeks, a week ago, I would have probably said, I think growth and I think stability of the finances. She was looking at a hopefully one and done income tax rise. Now that has been abandoned at the, pretty late stage. So it seems like it's just short term relief. It will be really interesting to see, obviously the fiscal hole that they keep talking about has miraculously shrunk in the last week. So they've got less revenue to find, but it'll be really interesting to see where they get that from, because it looks like they're kind of trying to rinse all of us, be it your homeowner, a pension, a worker, someone who pays into a pension, someone who pays income tax. So what else can they actually do? So I think that having a more streamlined message and potentially focusing on keeping the budget short and sweet and to the point would be, that is certainly the best course of action. But I think that the fact that they are targeting now a number of tax increases is a sign that it's just kind of scrambling around to fill this hole. And the risk is we'll be in exactly the same position next year, and then they'll have to do something, be that something
Yeah.
big like income tax rises. But I think if that still happens, if that's still the case, there's a good chance that there'll be an election before the next budget.
Yeah, it's been really interesting tracking all of it, because the idea that you weren't going to increase income taxes, I think if you look at the way the government generates revenue in taxes, income tax, national insurance, VAT are the largest, and to kind of park them all across and say like, oh, we're not going to touch these, I think, it's been very, very interesting how they're going to do it. I think we need to see some spending cuts, but how exactly and where does that come in? I nobody knows at this point. It's just kind of like guesswork. We have to wait and see. It's really, really interesting.
It is really interesting. And, there's the biggest expenditure is obviously in the NHS. Now we've got, Wes Streeting does seem to have quite a good handle on the NHS, and he has made some changes. But I think, we certainly haven't in any way got to the reckoning whereby people are looking at the productivity within the public sector, the cost of services which are going up in line with the private sector, if not more, because of pay rises in the public sector, and looking at it really and saying, well, is this worth it? A lot of taxpayers are looking at it like that. They're saying, well, is it worth it? That's why people are leaving the
Yeah.
UK. That's why people don't want to contribute their taxes. So it's that there hasn't been those big discussions. Obviously, there's been a reversal on looking at welfare and benefit cuts, but who knows? They may be forced into that because that the Labour Party gave in on that battle because of pressure from left-wing MPs who seem to be a little bit out of step with public opinion. So it'd be interesting to see if the Chancellor, Anne Keir Starmer, can try and rebuild credibility by pushing those changes through.
Now, before we carry on, I have a question for you, and it's a serious question. Would you like to own a Rolls Royce? And I don't mean the car, because obviously that would be very, very nice. But if your answer to that question is, yeah, Pete, that would be amazing. Thank you very much. Then I have to mention today's sponsor, XTB. Now, they are giving away to new customers one free share in Rolls Royce. Here's how you can claim yours in 3 simple steps. So, step number 1, head over to XTB and register for a free account. Step number 2, when you're registering for this account, make sure that you accept the terms and conditions to take part in this free share offering. Step number 3, deposit some money into your XTB account and make sure that your account is fully verified. Once you've done this, and within 3 business days of your deposit clearing, you will then be credited with 1 free share in Rolls Royce. Now, just to let you know, they recently ran a similar campaign where they gave away a free share in Uber. That ran out in 4 days. This is a limited availability. It is first come, first serves. I will literally put a link in the description and in the comment section for you to start the process and get a free share. I have my fingers crossed for you, and let me know how you get on in a future video in the comment section down below. One thing that has been a topic of conversation, which has garnered a lot of attention, is potential changes to ISAs, either in a reduction to the cash ISA limit. Do you think that's something that's realistically going to be in the budget next year? I mean, I get the intention behind it to get more people investing, which I'm all on board for. But do you think it's something that we might see?
Yes, I think probably we will, because the Chancellor is now scrambling around looking for revenue. They're not going to take it from income tax, but they will take it. So for ISAs, cash ISAs in particular, they'll probably lower the limit. Um, there have been a lot of rumours that it was going to go down, be halved to
Hmm.
£10,000 a year tax free. That has obviously gone down with a lead balloon, especially among, there's a lot of fans of ISAs out there, cash ISAs out there. And that caused a lot of pushback from towards the government. So there's a chance that they will lower it maybe to 12,000 or potentially even 15,000 as a little sweetener. Now, it's not much of a sweetener if you can invest £20,000 per year. But I think that's going to be cutting the cash ISA limit is going to be quite palatable for for the electorate. And the reason why is that a lot of people don't have £20,000 to just put in a
Yeah.
cash ISA. Now, in terms of the difference with keeping, trying to do it to encourage investing, and I hope it does encourage investing. And I think that it's right that the stocks and shares ISA limit is not cut, because you are taking a risk when you put money in stocks and shares. You are betting on the economy, of the global economy, but the British economy if you're in the FTSE 100 or other UK based stocks. So that can be a way to be pro growth as well, right? We're pro growth for the stock market. We know that we're underinvested as a country. We've got a lower proportion of people making investments here than there are in America. And look at the wealth gap. So if we invested more, we could close that wealth gap with America. So it really is a cost. It's an issue about kind of lifestyle, about wealth gaps, and about just promoting an investing culture, letting your money work for you. And I think that would be a really powerful thing that the Chancellor could do next week. And if she can do that whilst cutting the cash ISA limit, but make this really good case that actually by doing that and promoting stocks and shares ISAs, maybe even raising the limit for stocks and shares ISAs, which I don't think she should do, but I wish she would. I think that would be a way to be very pro-growth, very pro-Britain, very pro our best companies. There was talk about a British ISA. Again, that didn't float too well, but I'm still interested in that to see if she actually does it. Maybe that could be a separate ISA that you can get on top of your other ISAs. And maybe that's a separate limit. So that's a limit on its own. So on top of your other £20,000 limit. So, that I think could be really, really interesting. And I'd love to see that happen. And I'd love to see how that panned out over the next 5 years. And I think it would work very, very well, both for the user of the ISA, so the investor, but also for British companies.
Yeah, I think anything that gets people investing more is going to be a good thing. I want to ask you this though, because there is obviously this push to ensure that more of the invested money goes into UK companies, UK economy per se, and I've been like, okay, cool, this could be a good thing, but if you think where the money flows globally and where the performance has been globally, it's been in the States. So, with you being at XTB, being the research director there, how do you view that? Do you think, obviously, it's going to benefit the economy? Do you think the returns are there by mandating that part of the portfolio has to be invested in the UK as being proposed?
Of course not. No, because you're exactly right. The US has consistently outperformed UK and European stocks. So, and the other thing, it's very dangerous. It would be very dangerous to just say, just invest in a British ISA. The reason why is because you'd be too concentrated. You'd have
Yeah,
a lot of people say are worried about concentration risk with the S&P 500. Well, you'd get exactly the same with the UK. I would say, of course, that our UK FTSE 100 and FTSE 250 are very globally focused. They generate the well over half, both indices. In fact, the FTSE 100 is about 75% of revenue generated from overseas. So if it just included the UK's biggest companies, biggest listed companies, then you would actually be quite well diversified. However, I do think that that's what I was saying, really, that it should just be it should be a portion of your ISA, maybe something on top of, because it is really important. We're constantly saying it. I know you say it as well, Peter. It's about this kind of diversification. Protect yourself through diversification. Don't put all your eggs in one basket. There's so many other, pithy quotes we could use, but it has to be part of the investment mix, and it shouldn't be all of it. It should be optional.
yeah, I would agree with that. The Chancellor has alluded to the fact that she does want it to be a growth budget. and she spoke a little bit about bringing interest rates down so that as inflation falls. What do you think needs to be in the budget to actually influence interest rates in 2026? Because inflation is stubbornly high, yet we're seeing the bank rate where it is. And I don't know whether they're indecisive as to whether or not they should continue to lower or whether they're just sticking. What's your opinion?
Well, the market expects them to cut. There is an expectation of a cut, about a 60% chance of a cut, 60 to 70% chance in December. Which could maybe take the edge off a painful budget with lots of tax rises. But the outlook for 2026, as you said, is totally murky. Yes, inflation didn't reach that 4% peak that the Bank of England thought it would in September. But as you say, it's still very, very high and well above the bank's 2% target rate. So it's a little bit disingenuous, I suppose, to expect the Bank of England to drop interest rates back to 2%, 1.5%, anything like that. That is just not going to happen. We might get down to maybe 3.5%, maybe 3.75% if we're lucky. And it's going to be very hard for the Chancellor to do that on a permanent basis. You can certainly do it on a one-off basis, and that is reducing taxes on energy, reducing energy bills for consumers and for households. So that is a big portion of headline inflation. So that includes energy prices, and we have a very complicated energy price structure in the UK. If they can change that and reduce energy bills without causing too much damage, obviously, to the energy companies and the like, then that would be huge. But it would just be a one-off impact because, if we've got runaway inflation in other areas, that will come back to bite us. Now, one thing, if she does want to keep inflation moderated, that would very much be, don't mess too much with VAT. That is something she said she wouldn't. So we don't expect any change in VAT, but you certainly wouldn't want to do that if you're looking at how to monitor inflation. And then, actually, it's not really things. It's spending essentially that should monitor it, that will moderate inflation. So whilst public sector workers work very hard, and I do think that there was a need, I'm sure, for wage increases there. I think that needs to be really dealt with very carefully going forward. So because we've had this big increase in public sector wages, particularly for junior doctors and other areas, that's above inflation. And that has had an impact on inflation because there's been more money, higher wages to spend. So that has really had an impact on inflation. So actually, it's about the spending side of the budget. There's not much else really that she can do, but if she can get government spending restraint, particularly in wages, so that they maybe come back to private sector levels, that could be another way to weigh down on inflation. But there's no easy fixes, Peter. There really isn't, because partly inflation is global, partly it's set by your labour market dynamics, and partly it's set up by your energy market dynamics. So she can just target one of those. I think that would have a real big impact.
Yeah, I think it's going to be interesting to see what actually happens because, you look at, trying to correlate with, interest rates and inflation and what typically works there. And it's like, okay, well, if it remains at 4%, how are you going to bring it down? And I think all the stuff that you've just mentioned there are going to be key points to watch out for as well. Now, I'm interested to know, so you guys at XTB, you're the research director there. What are you guys watching at the moment from the budget, and why? What are the things that would be interesting for you and may signal, how you communicate with people in terms of the investment side of this?
Yeah, I mean, obviously, ISAs and any change to ISAs is going to be huge for us. That's what we're watching very, very closely. Obviously, we're an investment platform, so anything that promotes investing is really, really positive for us, for our clients, and for potential clients down the line. Any changes to cash ISAs as well will be watched very closely. And of course, how financial markets work are dependent very much on what central banks do next. So, as we've just mentioned about, impacts on inflation from this budget, the inflationary impulse from this budget, whether it will help moderate inflation or push it up, that's going to have a big impact on financial markets, a big impact on, certainly the pound for sure, and also just how much confidence she can give back. Because everybody needs confidence to invest. Everybody needs confidence to spend. If we're seeing, if we see a big bond market reaction from this budget, which I don't think they will, because I think that bond market reaction was actually last week, then I think we'll see, that would have a knock-on effect on lots and lots of businesses and the whole economy. But we certainly are, we would certainly promote anything that is going to encourage it, responsible investing. And hopefully that's the track that she will take. She's spoken really well. That's been the one positive side, actually, of Rachel Reeves' time as Chancellor. She's spoken about the need to invest more, because that's how you can boost living standards. That's how you can, we can close that wealth gap with the US, which we talk about so much. If we want to boost living standards and increase living standards as a country, we cannot just rely on our pensions that we've got with work, or on our, even sometimes on our, putting money into a bank, because there is inflation, and inflation is real, and interest rates don't cover that always. So actually having this investing culture and really promoting it in the UK is just something that we are totally behind here at XTB.
Yeah. On that note, because we're talking about the UK specifically so far, I'm interested to know, because obviously looking at the markets, and today, markets a little bit down because of fears about a recession in the US. Obviously, the external factors and the global economy is still a thing. What are you guys seeing? Because they've just come out of the longest lockdown in US history. What are your thoughts on just the global side of things at the moment, in particularly the US?
Yeah, I mean, it's volatility is rising, and there's a lot of nervousness out there that's nothing to do with Rachel Reeves and what's coming up in this budget. The government shutdown was a man-made crisis that will have the potential to knock off 1 to 1.5% of GDP in the fourth quarter for the US economy. That won't lead to a recession, because a recession is 2 quarters of negative growth, because we think that would be a very much a V-shaped recovery. So actually from the second half of November onwards, things will bounce back very sharply, particularly things like consumer confidence, because after a certain amount of time of the lockdown, which was the longest, going on for 6 weeks, we saw consumer confidence really crash through the floor in the US as well. And that was the big issue. Added to that, we've had a complete economic data vacuum from the US. So we've got no idea whether or not the economy is weak enough to need an interest rate cut from the Federal Reserve in December, or actually whether the economy is doing quite well, bounce back quite nicely, and the Federal Reserve won't cut interest rates. Now that's had like a huge knock-on effect on markets, on the AI trade, for example, because it means that when, if the AI trade, for people to believe in the AI future, they need a really stable macro economy. And they need, a bit of foresight about how growth is going to play out. Policy will play out, and actually having a government shutdown takes away all of that. So it's no surprise that we've got the AI trade crashing, or not crashing, but certainly moderating as well. And we've seen Bitcoin fall nearly 30%, and that's linked to it as well, because for Bitcoin to do well, you essentially need, a very clear outlook. Again, like, a strong economy, lower interest rates would be great as well, because that promotes risk taking. And when you don't have that, taking on risky assets like Bitcoin, when you've had a much larger cohort of investors invested in Bitcoin through ETFs, be that much wider retail community, but also the institutional community, when you see a 30% decline, or when you even see a 5-6% decline, and Bitcoin is notoriously volatile, that exacerbates the sell-off. So that's why we've seen a 30% decline in Bitcoin, and why ETFs now are underwater for 2025 in Bitcoin. So we've seen this huge knock-on effect in financial markets of what's gone on in the US, which just really highlights how the US is the center of the universe, of the financial universe, which then, but just bringing it back to the UK for a second, Peter, makes you kind of wonder. I'm not saying that individual sovereign countries need to be, led by the US. I don't believe that at all. But why would the government, when financial markets, the FTSE, with the direction of the FTSE, the direction of the pound, and the direction of the FTSE 250, FTSE 350, so smaller businesses as well, are so, determined by the US and tariffs. Why would you add something else in the mix and go and knock confidence even further by just drip feeding a budget, kind of testing ideas? Don't test ideas. We don't want you to test ideas. You're meant to be the adults in the room. Start acting like it and just make decisions that are good and will promote growth.
Yeah, a little bit of leadership. I want to ask you, and this is maybe a little bit off the cuff, but it sticks with the theme in the US at the moment, because AI, AI, NVIDIA, they've done exceptionally well. AI and tools and all this kind of stuff explode into existence, and it's part of our day-to-day kind of like usage now. There's this real big fear around the AI bubble. And I think I saw something the other day about I think it was OpenAI or a company in the AI sector with, I think it was something like a 13 billion valuation, spending $1 trillion, and they were like, "How is this possible?" What's your general thought on the AI space? Is it a bubble? What are you paying attention to at XTV?
So it's interesting. Obviously, people talk about AI being really overvalued. I don't look at something like NVIDIA and think that's overvalued. That is a cash generating machine. In fact, tonight, the night we're recording this, we're going to get, tomorrow night, sorry, we're going to get the results. And there is expected, another record high, up more than 50% compared to a year ago. So it depends what AI you're talking about. Now, when I think that the mood shifted with AI was actually all to do with OpenAI. So that's the founder of ChatGPT. So they basically made $1 trillion of deals. We then heard that they weren't getting external advice around these deals. They were just so desperate for chips, compute power, that they were just willing to throw money at anything and expect them, that they haven't even listed yet. But I think that led to a lot more scrutiny of the AI trade. So in the past, a lot of people piled into AI because they thought the future is a growth area. It's going to be huge. There was, confidence in the economy. Growth was great, particularly in the US. And that was great. That was enough to just carry that trade up and up and up. But now you've got to think, okay, to build all the infrastructure for AI, just by, fairly conservative estimates, is saying that that's going to cost $5 trillion, right? The whole, that was what NVIDIA was worth at its peak, right? So this is huge. These companies, they've probably got, 300 to 400 billion, which is still a lot of money, free cash flow on their balance sheets. So all of a sudden they're going to have to borrow loads and loads to fund this AI build out. So all of a sudden you can't just buy an AI stock with, fingers crossed that AI is going to take off. You've got to start looking at their balance sheet and saying, well, do I like that free cash flow? Oh, will the stock go up actually if that's going to fall? Maybe they're not as safe financially as I thought they were. And I think that's been really interesting because obviously the hyperscalers, the Metas, the Microsofts, the Amazons, they've been spending billions and billions all year. They've pledged more for 2026. We've known this for months. But the sell-off came when OpenAI, some people may say, started to do silly things and just throw money everywhere. So to me, it's a bit of a backlash against that type of corporate behavior. But I don't think we've seen that in every part of the AI trade. And I think what we'll see going forward, I don't think it's a bubble. I don't think the bubble's going to burst. Some companies are being hit much harder than others. Oracle, for instance, share price is down 30%. It's as volatile as Bitcoin at the moment. We also have the cost to insure their debt, because they are going to be spending a lot of debt, raising a lot of debt to try and build out their AI infrastructure plans. That has doubled the cost to insure it just since September. So we've got this, I think we're going to see a divergence with maybe the likes of Google, Apple, NVIDIA, cash generative companies, strong results, strong balance sheets, not going crazy with the debt issuance, and maybe taking a bit more of a practical and sensible approach to AI compared to some of the others. And I think those AI players will really struggle going forward.
Yeah, I think it's the point that you were making at the beginning, the question you asked, what part of AI? Which is the most important thing, because I think if you're NVIDIA providing the things that are required for all of this AI development to come to life, I think you're in a completely different market than the service providers per se. And I think that's an important thing for people to know when they look at the AI sector and look at where they're placing money. because it's a different thing. It's a different service provision.
Oh, it absolutely is. And it's really interesting you say that, Peter, because essentially NVIDIA is like the supermarket for all the hyperscalers, but it's like the only supermarket in the world for anyone that wants to get AI exposure. So think of it like that, like all the things they're selling. And you're like, yeah, I mean, that is just a cash generating machine. And they are expected to report monster results, not just for last quarter, but for the next couple of quarters as well.
Yeah. Right. Last question for you. If someone watching or listening to this right now is worried about uncertainty, what would you say is important for them to focus on?
So, when you're worried about uncertainty, it is really important to just kind of go back to the fundamentals. So, you want to be diversified for sure, not just in, the UK, not just in the US, and it's very hard to not get exposure to the US. So, you want to just make sure that you just take a quick look at your portfolio, just make sure that you've got that kind of diversification. Is there anything that you could potentially add to just maybe equalize that up a bit? Maybe some European exposure, because Europe does, often gets forgotten about. But it's got its own thing going on. It has some fantastically strong companies that are looking really, really good value as well. Go back to value as well. So some companies are cheap for a reason, but some are just really kind of undervalued. If you don't think that there's going to be a recession or a big collapse in the global economy, and right now there is nothing to tell us that is the case, even though things are scaling back a little bit, we're not in the financial crisis. There's nothing yet like that. Then, looking at value stocks will be, could have some upside because there is a big concern around high valuations, maybe keeping out of tech for a little bit because chances are a lot of people have been in tech, whether they wanted to or not, just by owning the S&P 500, for example, or even the MSCI World, you'll have had a big exposure to tech. The other thing, of course, is just to stay invested. Don't panic. Don't let your fears and your fear about uncertainty take over, because what we usually find is that these things, they come and go. And it's the ebb and flow of markets. Markets always get ahead of themselves on the upside, and then they always get ahead of themselves on the downside too, and then they find their kind of equilibrium again. That's really normal market behavior. And if anything, a sell-off is a sign of a healthy market, because it suggests that, oh, hang on a minute, got to put the brakes on here because we went too far too fast in AI. We trusted OpenAI too much, so they pull back before it all goes collapse. So I actually think this AI bubble talk, this AI pullback is a sign of a healthy functioning market. So don't be too worried about that. Stay invested. Don't make rash decisions, because you could lose out on a lot of opportunity cost. And I think when it comes to things like the budget, most recently, and that's certainly been on the minds of a lot of investors in the UK at the moment. I think just break it down. Look at the FTSE 100. The FTSE 100 is generates the vast majority of its revenues from outside the country. So really, there's not much that Rachel Reeves can do to dent the FTSE 100. Even the FTSE 250, that still has more than 50% of its revenue generated outside. Now, if you are a bit concerned about the impact on consumers and consumer spending, just remember that they will try and balance that. Or even though they've made an absolute hash of it, hopefully on the day, they'll pull something out of the bag that works. So, for example, if they do a bit of tax grabs here, they'll try and reduce the energy bills here, or they'll promote some sort of policies that will cut interest rates. So don't think about what's going to happen next week on the day. You've got to think about how that will be balanced and how that will affect things in the next 6 to 12 months, maybe even longer if that's your investment horizon. And so don't make rash decisions. Think about the sectors it will impact. If you're really worried about consumer discretionary stocks in the UK, for example, your Next, your M&S, your Greggs even, just kind of come back and think, well, actually, if they cut energy bills for people will maybe feel a bit richer every quarter. Maybe they'll go and spend a little bit more. So it's really a whole balancing act. You don't need to go into that much depth. You really, really don't. But the budget isn't the be all and end all. FTSE 100, FTSE 250 even, they're a little bit protected from what Rachel Reeves does and what goes on domestically. And thirdly, now the government is trying to rebuild credibility. Hopefully what that means is that they don't pull something stupid out of the hat for budget day. And also they learn from their mistakes and they take a different path for 2026.
Yeah, really wise words there. Thank you for that. And I think for if you're watching this right now, you found this useful. What I'm going to kind of say is, if you have questions, pop them down in the comment section down below. We do this with XTB. We've done this maybe for the last 2 years. I think this is maybe the second or third year we've partnered with XTB around this time of year on things. And one thing I will say is this. Obviously, you've seen the ad that's been placed in the middle of this episode. If you do want to get a free share of Rolls Royce, just follow the steps, and the link is in the description down below. But Kathleen just said there, break it down and don't panic. That's the most important thing for all of us in all of this. And yeah, please do check out XTB. There's some other stuff I'm going to bring out shortly around ISAs, because we've spoken about that, which is quite topical. But Kathleen, thank you so much for your time today, and for the great words.
Thanks so much for having me, Peter. It's been great to talk to you again.